Ladies and gentlemen, good day and welcome to Aditya Vision Limited Q4 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Percy Pathanki from IIFL Securities Limited. Thank you, and over to you, sir.
Hi everyone. It's a pleasure to host Mr. Yashovardhan Sinha, Chairman and Managing Director, and Mrs. Yoshamvardhan, Whole-Time Director of Aditya Vision Limited. They will take you through the results for the quarter and the full year, and then we will open for Q&A. So over to you, sir.
Thank you, Percy. Good evening, ladies and gentlemen. Welcome to our earnings conference call for the Q4 and FY24. Today, we'll be discussing our company's financial performance and strategic decisions. Our investor presentation is available on the screen and we hope you have had a chance to review it. Before we delve deeper into FY24 financial performance, I would like to briefly touch upon the strategic updates of this quarter, as well as major highlights of FY24 and our vision going forward. FY24 has been a milestone year for the Aditya Vision. This year, we completed 25 years of our existence. We began our journey in year 1999 with just one store in Patna, Bihar. We haven't looked back since. Today, we have hit a century of stores in Bihar with presence in all districts, providing exceptional consumer experience. We have now solidified our presence in Jharkhand in 2 years and have started making a mark in Uttar Pradesh within 1 year of operation. We were the first consumer electronics retailer in India to be listed on the stock exchange in year 2016. We raised just 5.8 crores in IPO. Our expansion to almost 145 stores were through funds raised during IPO and our sustained internal accruals. We knew our dreams were ambitious, but we were confident in our abilities and vision of catering to the consumer needs in underpenetrated Hindi heartland of India. 25 years of Aditya Vision is a testament of not just our upward growth trajectory, but also substantial wealth creation for all our stakeholders. To commemorate the company's 25th years of existence, as a token of gratitude, the management declared a special dividend as an interim dividend of 51%, or rupees 5.10 on face value of rupees 10 each per equity share for FY23-24. I'm happy to announce that today our board of directors have recommended a final dividend of rupees 9 per equity share for FY24. We are pleased to report that our performance has remained consistent in FY24, demonstrating robust results across various financial indicators. FY24 has been another standout year for us. Our revenue in FY24 surged by 32%, reaching rupees 1,743 crores from 1,322 crores in FY23. Our PAT increased by 20% to INR 77.07 crores in FY24 compared to INR 64.14 crores in FY23. We have almost doubled our revenue in the past 2 financial years. This exceptional performance highlights our deep understanding of the region we operate in and unwavering focus on driving sustainable and profitable growth. Our revenue grew from rupees 306.27 crore in Q4 FY23 to rupees 375.67 crores in Q4 24, a growth of 23%. Our PAT in Q4 FY24 grew by 16% year-on-year basis to rupees 7.85 crores compared to rupees 6.78 crores in Q4 FY23. Q4 FY24 experienced good growth despite challenges owing to extended winters this year. For the entire FY24, a total provision of INR 8 crores was made for ESOP granted to our employees, which had an impact on our balance P&L. We strongly believe extending ESOPs to our long-term employees will provide a substantial value creation in both short-term and long-term for the company. During FY24, the company for its expansion has entered into many new and long-term leases, which along with existing leases has resulted in a net charge of INR 8 crores in the PL due to application of Ind AS 116 lease accounting principles. These impacts will eventually reverse in the future period and does not have any impact on our cash flows. As you are all aware, our business has an element of seasonality, with Q1 being traditionally very strong due to growth in demand of ACs, refrigerators, room coolers, and other refrigeration products. As such, as part of our business strategy, we adopt an aggressive inventory acquisition approach to avoid stock-out situations. We start stocking inventory, especially compressor products, from the beginning of Q4 itself to be well prepared for the sudden summer season demand for next year Q1. Also, at the financial year end, we get very good deals from OEMs, which we are confident to easily liquidate in just the beginning of Q1. Consequently, our inventory remains at the highest level at March end and stood at rupees 433 crores. However, the average inventory for this financial year through the 4-quarter end stood at rupees 316 crores only. In Q4 FY24, Bihar contributed the most of our revenue with 83%, followed by Jharkhand and UP contributing 11% and 6% respectively. In entire FY24, Bihar contributed 86%, followed by Jharkhand contributing 10% and UP contributing 4%. Our SSG for Q4 FY24 stood at 6% and for entire FY24 stood at 15%. Our strategic expansion efforts resulted in the opening of more than 1.5x new stores this year as compared to the previous year. We opened 40 new stores this financial year compared to 26 stores opened in last financial year. Our store count as of 31st March 24 stood at 145 stores, with about 30% of our stores being less than a year old. We added 13 new stores in Q4 FY24 alone. As on date, our store count is 148, where we are present with 105 stores in all districts of Bihar, 24 stores in Jharkhand, and in 20 out of 24 districts and 19 stores in UP in 14 out of 75 districts. Now we are present in altogether 72 districts in Hindi heartland. As you all are aware, we recently raised growth capital to the tune of rupees 282 crores from Capital Group, one of the world's largest FI. This is our first fundraise after our IPO in 2016. This fundraise has primarily been utilized towards repayment of debt, working capital requirements, and other general corporate purposes of the company. Consequently, we have become a net debt-free company. Lastly, we look to the future. We are excited about the opportunities that lie ahead in the thriving Indian retail industry. The world is now looking at India for its growth, and we are excited about the potential opportunities lying ahead. With our focus on providing superior consumer experience, increased customer satisfaction, and geographical imprint, Aditya Vision is well poised to consolidate its position as the go-to destination for consumer electronics in the under-penetrated Hindi heartland of India. With each step forward, we remain committed to setting new industry benchmarks and delivering superior value to our stakeholders. I will now hand over the floor to Mrs. Yosham Vardhan to provide an overview of the financial highlights for the quarter.
Thank you, sir. Good afternoon, ladies and gentlemen. We are pleased to present the robust financial performance of Q4 FY24 and FY24. Here is a summary of our financial achievements. In FY24, revenue surged by 32% to rupees 1743.29 crores in FY24. Gross margin stood at 15.9% and EBITDA reached rupees 167.49 crores. PAT exhibited a growth of 20% to rupees 77.07 crores in FY24. SSSG for FY24 stood at 15%. In Q4 FY24, revenues marked a YOY increase of 23%, reaching rupees 375.67 crores. Gross margins were efficiently maintained at 17.4%. EBITDA for the quarter stood at 37.63 crores. EBITDA margin stood at 10%. PAT for the quarter stood at 7.85 crores, up 16% YOY. SSSG for quarter 4 FY24 stood at 6%. ESOP provision for the quarter stood at 2 crores. However, it is important to note that this is a notional expense impacting the profit and loss statement without any impact on cash flows. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from Emkay Global Financial Services Limited. Please go ahead.
Yes, hi. Thanks for the opportunity and congratulations on a healthy network expansion and good SSG performance for full year FY24. Sir, I just wanted to check your thoughts on the demand trends for the ongoing quarter. Q1 is typically the biggest quarter for us, and there is significant heat waves that have been there across regions this time around. So if you could just throw some light on the current demand trends in the areas we operate, will be very helpful.
Demand has been very good in the initial April month of April. May has also initially done well, but lately there has been rains and all that in various parts of this region. But we expect that we'll be doing well.
Got it, sir. And in UP, we are currently at 19 stores. So just if you could share some thoughts, because this has been the first season for this geography. Are we on track? Are we doing better? If you could throw some light on our network in UP as well.
Already we are, in fact, UP is contributing around 6% of sale in last quarter, as I have already spoken. So we are just hardly 1 year old there, just little over 1 year. So I think that UP is doing very well, and let us continue. In fact, we are doing very well, and we will continue to do very well in UP by extension.
Right. Sir, on gross margins, I wanted to ask, as the performance has been very good for full year FY24, despite our mix sort of moving from the home entertainment category towards digital and others mix. So what are the key drivers for this sustained gross margins, if you could throw some light on that?
Actually, most of our revenue comes from the large appliances. So this is very important. And others also that contribute, they also carry very good margin when we talk of other products like home appliances, kitchen appliances, small appliances. So these are and our contribution of our mobiles and IT is just over 20%, a little over 20%. So it will get around 21%. So this is the key driver because, as you know, we concentrate more on our large appliances market and other other products which carry more margin.
Got it, sir. And last question from my end, this 150 odd crore of working capital during the year, is this in anticipation of a strong summer, or we have also introduced some new categories at our stores? So if you can help us understand that.
You mean to ask me that the high level of inventory at margin?
Yeah, ma'am, I want to ask as in if it is in anticipation.
I just elaborated in my earning call, but anyway, typically March end, in fact, just summer is just starts by March end. So we are always looking towards the stock out situation later in the period, let us say April end or March end. So typically we have to have stock in air conditioner and other compressor products as well as air coolers, which are very bulky in nature. So we have to store them. And in fact, this has been the trend right throughout our financials.
Yes, sir. So
I said that, and I also told you that average inventory, if we look at average inventory of our company, then it is just 300 odd crores. So year end we will have to carry because of good deals, in immediate very good season jumps in. So these are the factors.
Got it. So I just wanted to ask if there has been introduction of new categories also at our store. So
no new categories. No new categories have been added. Nothing new.
Got it, sir. Very helpful. Thanks for taking my question.
Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset Private Limited. Please go ahead.
Hello.
Yes, Arpit. Hi, Arpit.
Hi. I had a couple of questions. I'll just list down all my questions first. I wanted to understand when will our NSE listing will happen, because I think we have crossed a certain net worth requirement. So when can the NSE listing can happen? What are our plans to hire a Big Four auditor for our audits for FY25-26? What the ESOP cost will look like for FY25, given that you've already spent around 8 crores in FY24. And how the summer of Q1 looking like, since some of the brands have already reported 60-70% kind of growth rates for the month of April and May, and given the kind of store openings that we have already done, like about 40 stores opened in last year, so are we ready to see a big jump in Q1 FY25? Like, can we see that magical 4-digit number for Q1 FY25 as we are aspiring to do? And one bookkeeping question, Q4 FY24, we saw a very big jump in finance costs. Can you please allude to what has happened over there?
So what was your last name? Finance cost?
Finance cost in Q4 FY24. That has jumped drastically.
Okay. So coming to your first question, NSE listing, about NSE listing in this quarter or maximum by next quarter will be definitely getting listed in NSE. Video from Big Six, they are already doing our India 116 computation. And we are finding out ways how to onboard them. Or it is in active, as I told you earlier also, it is under consideration of the management. ESOP this year, cost of ESOP will be 1.5 crores on our PL. And finance charges were higher due to the fact that we were utilizing full credit limit because of, as I told you, we want to keep a high level of inventory comprising of compressors, products, and air coolers. So this was the reason.
What do you think about the summer of Q1?
I beg your pardon?
What do you think about the summer of Q1 FY25? How was the quarter looking like?
April has been extremely well. Beginning of May was also good. But lately, in the last leg of May, it has started raining in many parts of Bihar, Jharkhand. So, but overall, we think that we'll be doing well, quite well in Q1.
You think that you can touch the magical 4-digit number in Q1 FY25?
We always try for the same thing, but we cannot comment at this moment.
Got it. Best of luck. Thank you so much.
Thank you.
The next question is from the line of Prithvi Chera from Lucky Investment. Please go ahead.
Yeah, thank you for the opportunity, sir. The UP stores which have been opened in the last 1 year, at what system level sales have they opened at? Annualized, if you have to give some annualized color, what are they opening at? What is the...
Can you please speak louder, please?
I said, sir, the UP stores. Can you hear me?
You can hear.
The UP stores, at what system level sales are they opening at? And what is the performance so far in these UP stores that you opened?
UP is doing well. We said that we are very good entry in UP, and we are doing well there.
So are they opening at higher than your usual stores that they open? Are they opening at equal in the year one?
We are doing basically similar performances there.
Okay. And my other question is, sir, since the last 2 years we have been on aggressive store expansion, so the cash flows obviously get utilized for creating inventory for your new stores. When will you reach a situation where your cash flows will be higher than the store expansions that you do?
I think by next year we will be having this situation, definitely. If not in half year, in H1 25, we will definitely be at that level in this financial year, current financial year.
So what is your now the store expansion plans for 25 and 26?
25 and 26. Actually, we are now gradually moving towards central UP, where there is a very big opportunity lying ahead. Apart from that, we are now getting our second stores opened in various towns in Jharkhand also, where we are doing very well. So we are taking that opportunity also. Similarly, we are mulling going to maybe in 25 will be financial year 25-26 will be going to Chhattisgarh and Madhya Pradesh also.
So then you're going to continue to add what number of stores per annum?
We are looking to add around 25-30 stores per year.
If you add 30 stores per year, which is 3 crore for your inventory at the year end plus 1 crore for the store, so 1 to 4. So you'll end up using about 120 crores of cash flow in creating these 30 stores.
Yes, sir. That will be the investment, yes.
So till the time you do 30, then there is a cash flow surplus, because see, last year you did 40 stores, so your whole entire cash flow went into creation of these stores.
I think the cash, but in my opinion, cash flows are there to, that is internal accrual which we must use for the expansion itself.
Okay. So your plan is now to enter central UP, interiors of Jharkhand. Chhattisgarh, do you have a presence or you don't have a presence today?
No, we don't have any presence in Chhattisgarh.
Okay, so Chhattisgarh and MP becomes the newer states of entry.
Yes, that these will be maybe in 25-26 we are going to take up.
So which means we'll actually see continued cash flow utilization for store expansions for the next 3, 4, 5 years.
I think so, because if we have free cash flow, then why should not we reinvested in the business? This is what we have done over the past so many years. Okay. And that is the reason where we are right now. So there is no point keeping cash that way. The cash flows should be utilized for growth and expansion.
Okay, sir. Thank you very much and all the best, sir.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities Limited. Please go ahead.
Hi, sir. Just continuing the earlier question. So since you mentioned that whatever store expansion targets that you have, you will be able to fund it through internal accruals, what will be the use of the 280 crore primary infusion from Capital Group? Will that just keep lying on the balance sheet?
No, that will not keep lying in the balance sheet. Actually, it is for our working capital. Right now also, it is mostly the money is for the working capital. So apart from that, it will make our company very robust financially. And going ahead, we can our expansion can be faster.
Right. So as of 31st March, what is the net debt or the net cash that you are sitting at, including when I'm saying net, take all types of borrowing, whether it is for working capital or for long term, whatever it is, everything?
I think it is just almost around 8-9 crores net.
Okay, 8-9 crore net.
If you strictly compare only debt to cash lying in the books.
Correct. Understood. See, secondly, just if you can give some realistic guidance on your gross margin, because you have done around 16% gross margin, but your PPT gives a guidance of 13 to 15 going ahead. So if I take a midpoint of that, that's 14. So that 200 basis points difference, it will also transfer to the EBITDA line. So how should investors and analysts realistically sort of forecast your financials? Should we actually be taking a 200 bips decline in the EBITDA margin in FY25 and 26, or you are just sort of erring on the side of caution and you think it is very much more likely that the EBITDA margins that you are doing currently will sort of continue in the foreseeable future?
I would say, of course, it is not an important. What exactly happens that when you are entering into new territories and when you are expanding in newer states, you just really don't know what you are going to face. And secondly, the share of the IT products and mobility is bound to increase in time to come. So we take these things into account to make our projections for the investors, that going ahead we will have this type of we can have this type of margin. But actually, when you are entering in new territory, how would you know how you are going to, what type of players are there, how they are going to behave, how your competition is going to do there? So we definitely we are slightly cautious in projecting the margin. Percy, the main thing you will have to understand that when let us say when we were in Bihar, so we were knowing the Bihar market, Bihar competitor, how they sell, how we sell, and everything is clear about that. Then you enter into Jharkhand, you face new dealers, new competition. Then again it behaves differently there. It may. But right now, till now, we have been managing our gross margin very well. And then
so right now you are in 3 states, sir, UP, Bihar, and Jharkhand as of now. So at the gross margin.
No, 1 second, Percy, I'll tell you. UP has just contributed 6% in our overall sales. So it is too early for us to say anything that we have done. We'll be getting that margin in UP also.
No, my question is slightly different. It is not even at EBITDA level. I am saying for these 3 states, as it stands right now, would you say that the gross margin is roughly the same across these 3 states, or is it different?
I will not divulge exactly what margins we are having state-wise, but I can only tell you this, that it does differ.
Okay, it differs. Okay, understood. And you mentioned that the mobile percentage might go up and that might affect the margin, which is very true. But then the benefit should also come in terms of accelerated top line. Would that be right to understand? Because mobile is a high value item, it takes up very little space in your store. And if that percentage is increasing, then it should have a tailwind on your sales per store.
Actually, Percy, if we want to increase our sale, it is very easy for us to increase our sale by selling mobiles. Because as you know, mobile business, we don't have any dearth of sale. But if we, as you said, if we compromise on our margin, then the sale can maybe sale from mobile can grow rapidly, and in fact it can drive our top line as well. But then, as I told you, that we are very conscious about our margins and our financials, so we do not focus on remunerative sales.
Sure. My question was only in light of the fact that you mentioned that the mobile percentage would go up and that might have a slight dampening effect on EBITDA, and therefore I just asked that whether it would be offset by sort of tailwind on the sales per store.
But margin won't be affected, Percy. Even if your top line grows, but if you are taking lower margins, then overall margin is going to degrow.
Okay. So yeah, that's all from my side.
Top line may grow, but margins will come down.
Yeah. Understood. Okay, that's all from me, sir. Thank you. You can continue with the question queue now.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the question from all the participants, please limit your questions to 2 per participant. Thank you. The next question is from the line of Himanshu Nair from Systematic Institutional Equities. Please go ahead.
Yeah, hi. Good afternoon and congratulations on a good performance.
Hello, please speak louder. Hello.
Yes, sir. Am I audible now?
Yeah. Yes.
Okay. Yeah. So my first question, sir, would be on the same-store sales growth. Wanted your comments on the premiumization trends that you are witnessing currently. Do you think going forward your SSG will be driven more by a higher ASP as people might buy more premium products, or by higher number of units sold? If you can comment on the composition of your SSG and the guidance on that.
Our SSG last year was 15% and the quarter was 6%. And traditionally, if you will see our financials, and you will find that traditionally Q4 is always having lower SSG. And 15%, I think, is a quite healthy SSG for our stores.
So that's what. So is that 15% driven more by higher ASP of the product or by more number of volume sold from you?
Coming to ASP, actually our ASP is also going up by 5% year over year. So which is currently right now it is 22,150. 22,150 to be exact. So the SP is growing almost 5% year over year. So SP is also a factor, yes.
Got it. So secondly, on these recent reports of so many areas facing power cuts and power deficit, not sure about how the situation is in your markets. But if that becomes a issue, do you think that can impact incremental demand in any manner for the next couple of years or so, or not really?
I may not be able to comment on this because right now that we are not facing anything as such. But what happens in future, that can be anybody's guess. But right now it's not a problem. The electricity is there, and it is normal as it was before.
Mm-hmm. And sir, finally, just one clarification on the inventory side.
Sure.
Am I audible?
Yes.
Yeah. So one question on the clarification on the inventory side. I mean, if you look at, there has been a massive increase in the number of stores that automatically would have led to this increase in inventory. And if I look at the percentage change, it broadly looks similar. The change in increase in number of stores and the increase in inventory. So is this inventory build up in line with past trends, or there is some excess that you have done for this season? Basically, I wanted to understand if there is a change in the average inventory per store that you have at this time of the year.
Of course, at this time of year, there is a huge change in the average inventory, from average inventory. As I told you, average inventory for our entire company is around 330 crore odd crores. Whereas at March end, it is around 430 odd crores. So, of course, we have every branch, in fact, carries AC. Separately, ACs, refrigerator, air coolers. And right now, commercial refrigeration is also doing very well, in which deep fridges and all that. So these have to be taken in advance, stocked up. Then only you can sell it, because otherwise, going into Q1, it makes very difficult for you to take choicest products from the OEMs.
Yes, sir, I understand that. My question was more whether that average inventory per store this March, is it higher than the average inventory per store last March, same time? Because this would be a seasonal thing, right?
Yes, it was slightly more than the earlier years. The reason being that when we knew that summer had come early in South, and there was a huge demand of ACs in South, then we took a decision that maybe there will be a stock out situation very quickly. So we were slightly heavy on inventory this year.
Understood. That's all from me, sir. I'll get back in the queue. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Srinidhi from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just one understanding of the business. So when you deal with the brands in a high commodity inflationary environment, which could be the case few months down the line given copper is rising, so do you get to maintain gross margin, or do you get to retain absolute gross profit per unit sold?
I could not get your question.
Right, when the prices of product goes up, the brand, so you get to maintain the gross margin, or you look for gross profit like absolute 2,000 rupees per unit of AC? How do you deal in general? Is it gross profit?
We always believe in gross margins.
Okay. Yeah, understood. And second, sir, how much of your business comes from the consumer finance, and how much that ratio has changed over last 1 year?
Last 1 year, it has changed by over 300-400 bits. Right now, it stands at around 41% of our total business.
41%. And last one, sir, if I may.
Last year, it was around 35%.
Okay, 35 has gone to 45. Okay. And the last one is, so do you have a service revenue stream, or it's predominantly product sales as of now?
It's product sale only, but service, and we sell extended warranties. So that forms a service here. Plus, in fact, these retail financiers also, they in fact give us service charges and all that.
Right. And sir, one consumer finance related question I forgot to ask is, who really bears the subvention cost in most of the cases? Is it or it's the sharing between you and the brands?
No, mostly it is brands. They approve their retail financials, and it is subvention is borne by the manufacturers.
Right. Thank you for answering my question, sir, and all the very best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. Thank you. The next question is from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Hello, am I audible?
Yes.
Hi, sir. Thank you very much for the opportunity. Congratulations for good set of numbers as well as on the fundraise part. Sir, my first question, if you go to the product mix, we can see the 66% from the consumer part, large appliances. Just want to know what is the gross margin in each product category, if you can give us broader number.
I don't think we will able to divulge this. So actually, this is the entire mix which makes the difference. And
the point I'm coming because we have communicated in the past that in the high consumer durable space, gross margins are higher, and in the digital mobile and the laptop space, gross margins are lower. But we have seen
that you are right. You are very right. This we have already we have been saying. And every entire industry knows that gross margin in mobility, IT products is much lower than consumer durables, large appliances.
No, but in our share of consumer durable is coming down, but gross margin is increasing. So my question is that are we getting some very good margin from other categories that is?
No, I'll say that our gross margin is stable, not increasing. Our gross margin is stable in last, I think, 3 years. So we have been able to maintain our gross margins, and I think it's not because of increase in margin, but rather we are also focusing towards service-related products also, like we sell insurance also for the products.
So related to that only, if you look at you talked about the gross margin remaining constant or the same range in the last 3-4 quarters, but I'm looking at longer horizon, like 2-3 years. So if you look at gross margin in FY21, FY22, FY23, they have jumped from 12% to 16% as on FY24. So just want to know what has changed in that period.
Yes, there was a change. When it was 12%, our turnover was only 500 crores. And what is the margin, what we are giving when we have crossed around, we reached around 1,000 crores. So this is what is there in the retail. This type of retail. More sale top line will come. More margins will be coming to you through manufacturers.
So sir, if we expand further the margins, there's a further room for improvement in gross margin?
No, again, later on, now competition is also coming in everywhere. So we'll not say that by increasing our top line from there. There is a threshold of top line, I'll say. If you are doing more than 1,000 crore, 1,500 crore, the margins will be taken care of by manufacturers also.
Okay. So for last question from my side, what is the rent per square foot as on end of 24? Rent per square foot?
Per square feet, you can see my investor per square feet rent we have not calculated.
Okay. Fine, sir. Thank you. Thank you and best wishes always.
Thank you. The next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Sir, firstly, on the performance during the quarter, you did mention that there was extended winter during the quarter, but what is also true is that the summer onset has been early this quarter compared to last year. One of the large national retailers have also commented that the kind of sales that is done in April first week was seen in March this week. But that doesn't seem to be playing out well for us if you look at the SSG that has we have reported during the quarter. Plus the store count we have continued to increase at a higher pace, but that is not translating to the kind of growth that one could expect in the last 2 quarters. So we wanted to understand, is there anything else that has been playing out? Maybe, say, some of the new stores that we are adding in the new states, they are not scaling up as fast as we would have expected. or maybe the stores that we are adding in Bihar between the districts that you had alluded to some time back, that is cannibalizing some of our sales from the existing stores. If you can highlight something else on that.
I don't think that
Hello.
actually our sale is always, you are comparing with other geographies to us. In fact, March there was a very extended winter in this part of geography, very extended. So in fact, it went up to, let us say, 24th, 25th of March. So, but it was very hot outside these territories where we were operating in. So that this was the reason we built up inventory also in anticipation that companies will get exhausted of inventory. And as far as your sale is, what you are saying, that sale is not, you will have to understand that 30% of our stores are less than 1 year old. 30%. So they are gradually coming up and giving us the sale. And last quarter sale was muted because of what I said, that ACs, sale of ACs are very less in this part of geography.
Okay. Secondly, sir, on the finance cost and the other expenses, they have seen sequential quite a big jump. The finance cost specifically, given the fact that we had paid down a lot of our debt during the quarter, but still finance cost has jumped, it's literally doubled from Q3. So
No. We actually were slightly mistaken. Our funds what we raised, it was utilized by end of this end of the quarter, very end, maybe on 27th or 28th of March. So there is no impact of that in finance cost. And as I told you that we have been building our inventory from the beginning of the quarter, the interest cost was high. Operating profit, of course, when you open new stores, and then operating cost is going to go up.
okay. Right. And lastly, sir, just something on the bookkeeping. So if I looked at this quarter, the tax rate is as high as 50%. I think we have seen something similar last year also, within, say, the initial 3 quarters, the tax rate is lower, and then Q4 we have a higher tax rate. So wanted to understand this kind of inconsistency in accounting. This is with the background that earlier also we had some issues with within the accounting was not consistent, but we fixed a lot of it. But still there are few things that seems to be inconsistent. So wanted your thoughts on, why is it still happening? Like, why can't we, accelerate our push towards getting a much larger auditor like a Big Four? Why are we trying to delay it?
No, how auditors are concerned with it, I do not think so, because we were consistent. This year our tax has been consistent, and I don't think there was any deviation on that part.
But this quarter tax rate is 50%. Something similar played out last year also when Q4 tax rate was 15%, 50%, but in the rest quarter it was lower and 20%, 18%.
I'm not talking about that financial year. I'm talking about this current financial year, for what we are talking about, that is FY24. It has been consistent.
Okay, I'll take it offline. I mean, current quarter the tax rate is 50% for some reason, but that is not clear.
How percent? What percent you are saying?
The tax rate for the current quarter is like 50%.
50.
Yeah, 50.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the question from all the participants, please limit your question to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you.
Hello.
Hello.
Yes.
The next question is from the line of Percy Panthanki from IIFL Securities Limited. Please go ahead.
Hi, sir. What systems are in place for GST implementation, considering the recent issues with the GST? There was some surge in UP and so on.
In fact, we have already explained that it was lifted the very next day because I do not know what confusion was there with the GST department there in UP. But actually, as I said, that we start building up our inventory for summer season. So we had 7 temporary godowns, which were not listed in our place of business at that time because we had 1 month's time as per GST law. So this was the only thing they could find out when they made their searches. So apart from that, I don't think there was any problem. So next day, when in fact we applied also for listing these godowns, temporary, they were temporary godowns for exclusively for let us say April, month of April, March and April. So that was all. Next day we represented and everything was corrected.
Understood. Just a couple of other questions. One is, what would be the tax rate we should use for the full year FY25?
Tax rate, in fact, when you apply in the AS116, then tax rate goes up. So if you will see entire financial year 24, we are paying 2 crore, in fact, over and above whatever tax rate is applicable to us, which is 25.17%. So these go when we are dealing in lease business, lease premises and doing a business there primarily, then initially this surge goes up. In fact, provision for Ind AS, charge for Ind AS, and even tax rate also. But going forward, gradually this starts coming down, and in fact, it will come down, and that will have a positive impact on the balance sheet.
Right. So in the P&L, your tax line, if I divide it by your PBT line as reported in the P&L, which is post-Ind AS, what is the percentage for FY25 tax divided by PBT?
Tax rate?
Yeah.
Tax rate actually 2 crore is the difference. So it will be something around, tax rate will be, you can calculate it for you. Tax will be 28.90. It goes up to 27%, 27.1% almost.
Okay, got it, sir. And lastly, again, this has been asked earlier, but any timeline that you can give in terms of auditor appointment, that one of the big 4, big 5 auditor appointment, any timelines on that?
Right now, I cannot give you any timeline, but we are mulling it.
Okay.
One more thing, since you asked about the tax, in fact, I was looking at the financials. In fact, what happened that there was a loss on sale of assets reported in this operating expenses. So deferred tax was added to it, and so because of deferred tax rate went up to 8. The previous participant was asking me, and actual current tax was only 6.12%.
Okay.
6.12 crores only.
Okay. Yeah. Neha, please continue.
Thank you. The next question is from the line of Amit Jeswani from Stallion Asset Private Limited. Please go ahead.
Hi, Sinhaji. Good evening.
Hi, Amit.
Sinhaji, my first question is about how many leases have we signed already for FY25? Like, if leases which are signed but we have not opened stores.
It is 14 in number.
Got it. Second question, Sinhaji, is about that we've opened 40 stores new last year. एंड मोटा मोटी 6 करोड़ पहला साल का रेवेन्यू होएगा, मोटा मोटी 240 करोड़ ऑफ न्यू रेवेन्यू विल गेट फ्रॉम दीस स्टोर्स।
एकदम बिल्कुल सही,
बिल्कुल सही। एंड योर
6 करोड़ हम लोग, वी आर राइट ऑन बात। 6 करोड़ हम लोग फर्स्ट ईयर में आता ही हम लोग का रेवेन्यू, जो कि नेक्स्ट ईयर में 9 से 12 करोड़ चला जाता है। एकदम सही आता है।
तो वो अभी ऑलरेडी हो रहा है, राइट? 6 करोड़ इन यूपी जो नए स्टोर खोल रहे सिन्हा जी।
हाँ जी, बिल्कुल।
गॉट इट। एंड आप बोल रहे थे मार्जिन कड़क रहता है अलग स्टेट्स में, तो जो नए टेरिटरी में जाते हैं वहाँ मार्जिन कम रहता है या ज्यादा रहता है?
और ये डिपेंड करता है कंपटीशन के ऊपर में भी, और कि क्या वहाँ पे कौन कैसा वहाँ पे हमारा कॉम्पिटिटर है, पीयर सब कौन सा है, तो उसके ऊपर में डिपेंड करता है। प्लस स्टेट वाइज डेफिनेटली ये करता है, वेरी करता है, बट नॉट, आई वोंट से दैट वेरी सिग्निफिकेंटली, बट या स्मॉल वेरिएशन इज देयर।
गॉट इट। मैं ये 22% रेवेन्यू ग्रोथ हमारा डीएनए नहीं है सिन्हा जी। इट्स बीन वेरी वीक फॉर लास्ट 2-3 क्वार्टर्स। हमारा रेवेन्यू ग्रोथ कुछ चेंज हो रहा है क्या? क्योंकि हमारा डीएनए 30-40%।
We are saying this in Q3 our growth 30%। तो इसमें Q4 में बता तो मैंने कि एक्सटेंडेड यहाँ पे विंटर था, मतलब विंटर got extended up to late March। सो इसके वजह से हम लोग का कंप्रेसर प्रोडक्ट का सेल वाज अफेक्टेड।
Last year, Sinha Saab, how much compressor did you sell in this season, in last summer? Would it be right that India sold 90 lakhs and you sold 1?
1 लाख से लाख के ऊपर में किया था।
अच्छा, and would it be right to say क्योंकि इंडिया में 70% अगर ग्रोथ है तो हमारा ग्रोथ 70% से ऊपर रहेगा ये क्वार्टर, और हम 2 लाख कर पाएंगे?
नहीं, ऐसा बोलना दैट विल बी टू प्रीमेच्योर। अमित, हम वैसा हम लोग जो भाई हमेशा कमी का गाइडेंस देते हैं 60 पर कोई, दैट इज सर्टेन पीरियड वेर योर सेल जम्प्स लाइक दैट। इट्स नॉट दैट एट अ मतलब यूनिफॉर्म लेवल दैट टाइप ऑफ ग्रोथ कम्स इन। So, but we did very well in April, and in fact in beginning of May also, slightly lower right now because of rains and all that, some unseasonal rains have come. But we think that overall this quarter will be good.
Good as in 40% good, 50% good, or 60% good?
अब ये कैसे बताएंगे? अभी तो इस क्वार्टर में एक महीना 6-7 दिन बचा ही हुआ है, तो कैसे बता सकते हैं?
Got it. But focus remains that we will keep expanding. 30 stores is broadly 20% store growth. And नई geographies आपने कहा MP और मध्य प्रदेश, you think, Sinha Saab, that you will be able to finish entire UP this year itself?
No, not at all. So this is why, इसी के वजह से मैंने बोला था कि मतलब हो सकता है कि मतलब 25-26 में हम लोग इसको सोचें। अभी तो इन दिस करंट फाइनेंशियल ईयर हम लोग को देयर आर सो मच ऑफ अपॉर्चुनिटी इन यूपी। अभी तो यूपी में ही हम लोग को बहुत जगह स्टोर करना है।
तो यूपी में आपने तो अभी तक चौक आउट कर लिया रहेगा सिन्हा साहब, दैट हाउ मच स्टोर्स यू वांट टू बी। यू आर अज्यूमिंग 19 स्टोर्स, कि हमें 50 स्टोर 60 स्टोर, बिकॉज वी विल गो टू अ न्यू स्टेट विदाउट फिनिशिंग यूपी, और पहले यूपी का एक्सपांशन, मेजर एक्सपांशन खत्म करेंगे, फिर नए स्टेट में जाएंगे।
हमें लगता है कि पहले हम लोग मतलब विल बियॉन्ड लखनऊ एंड टुवर्ड्स कानपुर, तब उसके बाद ही कुछ भी सोचेंगे। और हमको लगता है कि इट्स अ वेरी वास्ट एरिया राइट नाउ। And when you ask me that whether इतना स्टोर वहाँ खोलेंगे तो what actually happens कि मल्टीपल, जैसे कहीं भी आप स्टोर खोले बहुत अच्छा कर रहा है, then you think that particular town or city needs another store also, and you will not like to lose that opportunity as well। तो इसलिए वहाँ पे 75 डिस्ट्रिक्ट्स हैं पूरे यूपी में, तो अभी तो हम लोगों ने करीब 14 डिस्ट्रिक्ट में ही अभी हम लोग गए हैं, तो अभी तो बहुत बड़ा मतलब मार्केट है वहाँ पे।
Because that is the reason that you raised the money also, Sinha Saab, to get into new territories. Be time. Would you say that 30 stores that you guidance was a conservative guidance, and we'll be able to achieve higher than that? Because 30 is also good. 30 is not bad. But I'm just saying, do you think we can do faster in UP?
मतलब वी आर देखिए आपको लास्ट टाइम भी हमारा गाइडेंस था उससे ज़्यादा ही हम लोगों ने दिया था बट वी वांट टू बी मतलब 45 आवर प्रेजेंस आल्सो तो ये सब को लगा करके हमने गाइडेंस हम लोग दे रहे हैं कि 30 स्टोर हम लोग करेंगे इन दिस फाइनेंशियल
Got it. Thank you, Sona Saab. Good luck. Best wishes for your summer season.
Thank you, man.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your question to one per participant. I repeat, please limit your question to one per participant. Thank you. The next question is from the line of Devanshu Bansal from MK Global Financial Services Limited. Please go ahead.
Sir, thanks for the follow-up opportunity. Just one question. Last year, June was, I guess, a bit heavy. There was some delayed or postponement in sales during last season. Do you think the base is high for June, or for you also, or it is more normal, and the growth that we have seen in April May can continue in June also?
No, this is very difficult to say right now, Devanshu. Actually, yes, base has been very high in June in last year, but it all depends on the season. Even last year also season it was quite hot in June, so the season was good for us. So it's very I cannot predict that, but yes, base was high definitely.
Got it, sir. That's what I wanted to ask. Yeah. Thank you, sir.
Thank you. Ladies and gentlemen, we'll take this as the last question, and I've handed the conference over to the management for closing comments.
Last one.
Management.
I have to speak. I'm sorry. We trust that we have addressed all your inquiries to your satisfaction. If you have any remaining unanswered questions, please don't hesitate to contact our investor relations agency, Go India Advisor. They will be more than happy to assist you further. Thank you very much for participating in this earnings call. Thank you very much.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.